Hello and welcome. I'm Snow. It is 15 o'clock South African Standard Time. So today it's basically Saturday. I have actually been quiet now for quite a while. If you recall, I even deleted everything, from, this YouTube channel because I wanted a fresh start. But recently I also deleted my Telegram account given that the FSCA, which is like the regulating body here in South Africa for like financial services, it started like a new thing. It introduced this new rule that whoever who shares things like signals, for example, will be considered a financial provider. I mean, a financial advisor, and as a result, they should be certified to do so. So some of us are not; they are just analysts. Oh man, the phone just decided to make noise now that I'm busy. It's always like this, which is why I never make a video. At the moment I start recording, there's always something that is going to be noisy. But I've decided that I'm not gonna let anything right now, disturb me or stop me from making a video. So today in front of me, I've got a chart of Tesla, like on the daily time frame. As you know, Tesla is listed under Nasdaq. It's part of like the seven magnificent stocks, worldwide. I mean, in the United States. When I'm talking about the seven magnificent stocks or the magnificent seven, as some of you might call it, we're talking about the seven most performing stocks there are out there in the United States. So Tesla is one of them. Also, since I think late 2022, Tesla has been moving, sideways. Why? Because we were in like a triangle. So we believe right now we have bottomed, because if you look here, there was our wave E around January 2023, which bottomed there, and then wave B there, and then wave C, and then D, and then E, which I believe just completed right now. But I will explain that in a minute. I did share in like in the Telegram group before I deleted that. Also, Jeffrey Kennedy thinks the same thing about Tesla, as well as Elliott Wave International itself. So if you don't know right now where to find me, well, I still have my email, I still have my WhatsApp number, I still have like my Twitter account. I'm now back because I figured now that I won't be found anywhere else, I think I should make myself available at least on Twitter so that some of you will be able to communicate with me. So there we go. I think this is our wave four right there. I think this is wave A, B, and then wave C. I will go to like lower time frames as to why I still think this is what is happening in Tesla. 45 minutes time frame. If you check right here, we have this wave count. Let me try and okay, adjust it a little bit so that you will be able to see what I'm talking about. So we have what is probably right here our wave A, and then these three waves to the upside, and then I labeled that as wave B, though it's not satisfactory, but I was like, this can be our wave B right here. If you look at this impasse to the downside right there, and then I labeled this is 1 2, and then subwave 1 2 3 4 5 within the third wave, which is unfolding right here. And then after that, we saw again a further decline to the downside, confirmed by a price gap, which is probably on the fifth wave right here. So I think this is the exhaustion gap. So I was like, this is likely our wave ABC of wave E, because also when I checked the Fibonacci retracements, we didn't reach necessarily the 66%, like which is the minimum within like let's say a diagonal, but I also use it in a triangle, given that diagonals and triangles share a lot of characteristics, as Proctor says in his book. But sometimes it's that 61.8. We did reach that one, not the 66% of like the retracement, Fibonacci retracement. So if you look at it, despite this disproportionality between wave A, B, and I mean wave A, which is right here, as well as wave C, we do see a reasonable wave count right here. For example, uh, if Jeffrey Kennedy's new technique, or you follow him, there is what we call the Kennedy like timeline, which is like a guideline, KTL in other words. It's a guideline that Jeff uses in order to predict the time span of wave four right here. This is called the primary KTL, and then this is called the secondary KTL. So what you do, you take that and then you move it to what, to the end of wave 4 in order to predict the what, I mean the end of wave 3 in order to predict what, the end of wave 4. So the secondary is basically projected from the end of wave 1 to the bottom of subwave 2 most of the time, but I will explain as time goes on. So what happens is, these two lines right here, when projected well, will often give like this space. If I take these horizontal lines right here, this is like the end, right, of like the primary KTL, and then the second line right here, which is the secondary, often longer than the first one, which is like the secondary, I mean the primary KTL. These two, when you like draw, vertical lines, they will often give this space right here. This box then will often predict where wave 4 will likely, end. So this is exactly where we see wave 4 ending within, like this range, which is like this one created by the primary, and then this one created by the secondary KTL. But I will explain it again later on. So this is reasonable if you look at it this way and you do all these projections that are kind of necessary, in order to, predict the time span of wave 4, or wave 4, where wave 4 is likely to bottom. So after doing my count, I was like A, B, and C. Why did I say A, B, and C, and then say this is probably the end of E, despite, this wave count as well as the Fibonacci projections? Well, in a triangle, Prector does say that we want to see a single double zigzag within a triangle, and we have already seen one in wave C. If you recall what I just did here, like while I was showing you my higher time frames. At Elliott Wave International, I think they counted it a bit differently, but we use different data providers. For me, I am counting 5 waves here, right here, which is like wave C. This means that I'm counting this as a flat, and then W, X, and then Y. And we see A, B, C. But sometimes it happens that call like there's certain cases where we see exceptions. But in this case, I don't want to see an exception, so I will stick with this one. Do not complicate the wave principle. It's simple. So ABC, I think our triangle has bottomed here. Tesla is now in wave 5. So most of the time, wave 5 in stocks can be extended, especially like on higher time frames. That's what I've noticed. So if you look here, I have my wave count. It's wave one, wave two, and then this is probably wave 3 there. Because right now, if you count, this is 1, 2, and then subwave 1, subwave 2, and then within this subwave 1 and 2, we have also 1, 2, 3, 4, 5 of the this is like what we call the micro degree. So if you are familiar with like Prector's work, there are numbers that you can use. I think this is probably degree 13, and then this is degree 12, and then this is degree 10, and then minor is basically, I think, degree 9. There are numbers to this. Like if you go back and read Prector's book, like there are numbers that are like on the left side, under the wave degrees. So do not be confused when I say degree, let's say 7, instead of minor degree or things like that. So this is what you see right now. I think this is wave 1, 2, and then 3, and then we should see 4, of course, like after wave 3. But right now we should focus on what we're expecting. So we have seen already that our third wave is likely to be extended. And what makes me to believe that this is 1, 2, 3, 4 right here is because of this guy right here, the KTL, Kennedy timeline. You see, listen to that, like noise everywhere, and like that's the kind of life I'm already used to right now. But I'm not gonna cut the video, and I don't have like the software to kind of reduce the noise. So I will just pause for now, maybe play music for that moment, and then from there I continue, with the video, because I don't think, guys, you'll ever learn anything if there are people who are confusing me and then I stop because of that. Because I want you to learn, be as good as I am, because that's how like the guys before me have been doing it. That's how I learned. I've had like some of these courses disturbances. If like you listen to the Elliott Wave Junctures, by Jeffrey Kennedy, between the period of 2012 and 13. That shouldn't stop you noise by people. Those people, they know very well that I'm making a video. They know that I'm a YouTuber. So most of the time I feel like they're doing it to spite me at some point. But I know one thing: the amount of money they make, in a year is something I'm going to eventually make in a matter of a month, because this year I am going big. So if you look here, I have drawn my lines from there to there, which is the primary KTL, and then the second one, as you saw, it was drawn from there to there, which is what Jeff calls the point of recognition. And then there is that, like that range between, these two lines, and that's where this wave four of this degree, which is the sub minute degree, like where it bottomed. And then I think we should push to the upside. But also, there is another technique that Jeff will use. I will teach you about it as time goes on. But it says that wave four, most of the time, should not be four times bigger than wave two. So in this case, if we continue to move sideways within this wave four, let's say this is A of a triangle, or W, of a complex correction, we should like our waveform shouldn't be four times bigger than this wave two right here. Let me just demarcate it. Okay, I didn't mark it. This guy right here, in as much as it's small, but this wave shouldn't be four times bigger than it. So this is what we're expecting right now. But to keep things as simple as they can be, in terms of our Elliott Wave analysis, um Occam's razor, does say that just always go with the simple stuff. So, what are my expectations right now? We shouldn't go below this price right here, which is $210, 32 cents. Should we go below this one, 191, or this one's right here? It will mean that we have a complex wave E, in other words, which is like we've already seen our zigzag. So, instead of this guy right here, being wave E itself, like the bottom of wave E, this will mean that this is W of like wave E. That means also this one is kind of let's say a double zigzag, because if you look at it this way, this can be wave let's say A, and then this can be a triangle right here. I'm just like doing it for you right now, but I don't like that scenario at all, because it's not satisfactory for me as an analyst. I want to see my wave speed. It's very rare for a triangle to have truncated waves. That is when wave E or wave D and E are so small compared to wave A, B, C. Even wave C at times can be truncated. That can be a triangle. We say A, B, and then we say that C right here. And then we say maybe W, and then X, and then A, B, C. And then, like right here, say it's W, and then X, and then Y. That's highly possible. But we shouldn't go above it. But also we can go above it in the case of a W, X, Y, X, and then a Z right there. But also, if that's the case, we shouldn't go, up to these points right here. If we do, it shouldn't be, that high. At least this part right here, we should hold. So currently, I want to say I am long on Tesla, but I don't like the fact that it's wave five. Wave five, as you know, sometimes they can be truncated. Given that we had this price gap right here, and also this range, was very very powerful. So we can get a lot of like a strong resistance right there, to a point whereby our wave five is truncated. And if you look closely right now, you want to buy wave five at that point. It's not good. I guess it's not good, because you normally buy at the stars or sell at the stars. So let me do it for you so that you will see. Look at the risk to reward. It's like not pleasing, not unless you've been in already in this trade, and as a result you are just scaling in. It can work, but you know risking a certain amount for just a 1.61 like as your reward, it's not good for me. Well, ladies and gentlemen, that does it for me today. Have a good